What's going on, guys? Welcome back to the Good Success Quick Tips. I am Josh Culler, and with me today I've got our accountant, Josh Belk, and this guy's a rock star. He's in our mastermind, and he's just invaluable when it comes to the room. So in the Good Success Mastermind, he's our only accountant, and he's actually the accountant for Good Success, Olson Group, and even my personal accountant, and he's just very invaluable when it comes to information. So we have a buzzword right now, a buzz topic, more specifically, the Tax Cut and Jobs Act. Tax cuts.
You're right.
With an S, right? Yes, there we go. Yes. Okay, we were just talking about that. So the Tax Cuts and Jobs Act. So on this video, so we're going to come out with a couple others. For this video specifically, he's just going to give an overview of the entire thing. Like I said, it goes into more depth on the podcast. So if you guys want to spend the time to listen to that, go ahead. But Josh is going to go ahead and talk about that. So what do you have for us, Josh?
Sure thing. This particular law is so voluminous in the changes, it's virtually impossible to try to do in a quick tip video. Yeah. What I want to do here is just take a second and just really hit the high points. And I would encourage you guys to watch the podcast to get a little bit more information. There's a lot out there, but just kind of a few things. First of all, this really affects everybody. So everybody on an individual level is going to feel the effects of this particular change in the tax law. Everybody, for the most part, is going to also benefit from this particular tax law. Think of, first of all, there were 7 tax rates before. There's still 7 tax rates now. The only difference is the tax rates are now lower, and the spread between the tax rates is a little bit wider. So almost everybody that pays income tax will end up paying less tax because of this particular change in the tax law. The Affordable Care Act mandate, that has not changed. That's still there for 2018. So healthcare coverage, you want to make sure you still have that for this particular year. So that's something, a lot of information out there as far as it's been repealed. Yes, it has been repealed, but it's still there for another year. Something you want to keep in the back of your mind. A big issue, and I think the biggest issue, has been this whole topic of whether or not you can utilize a standard deduction or itemized deductions, and that is the biggest change. So bottom line right now, what's going to happen in 2018 is that your state and local income tax, real estate tax, mortgage interest, that's all going to be capped at a ceiling of $10,000. Your charitable contributions, you can contribute up to 60% of your adjusted gross income and it'd be deductible. Your miscellaneous itemized deductions have been completely removed. But what they've done is for the most part, double the standard deduction. So the standard deduction for married couple is $24,000. So for most people, unless they're contributing $14,000 plus, they're not going to be itemizing. They're going to be taking the standard deduction. So before, approximately 70% of people were taking the standard deduction. What we're going to see now is probably 90% plus take the standard deduction instead of the itemized deduction. That's probably the biggest change. I think one of the areas that's been had the most discussion. The alternative minimum tax is still in existence. However, they did increase the thresholds on that a little bit. Another really big area that's going to benefit just about everybody that has children is the child tax credit. So they increased that child tax credit from $1,000 a person to $2,000 a person, $1,400 of that which is refundable. Mm-hmm. So just about everybody that has children will benefit from that if they make under $400,000 a year. And then also there's a $500 dependent credit for anybody who's not a child that you're claiming on your tax return. So something else that I haven't heard a whole lot of talk about, but it's also there. And then one last thing to keep in mind for real estate investors, that the DPAD deduction has been repealed. So that particular deduction will be there, is there through the end of 2017. When you guys see this in 2018, it's going to be gone. So you want to keep that in mind as well.
Okay, awesome. So that is an overview. So thank you for sharing that with us,
Sure.
Josh. And we'll have you on for another couple videos, so don't go anywhere. Thank you guys for watching, and if you did find value in this video, make sure you give it a big thumbs up. Make sure you subscribe to us on YouTube or like our Facebook page, however you're watching this video. Thank you guys for watching, and we'll catch you in the next one.